So what is the difference between a mortgage balance or payoff and the title mortgage amount? Hi, this is Dave at TitleSearch.com. Many cases, we'll be looking at a title search and a client will have a question about what amount is showing on the title search versus what is the payoff or mortgage balance on that note or on that loan. Well, the mortgage amount on the title is what's recorded on title by that lender. In most cases, they're going to record the amount of the mortgage itself, how much is encumbering that title. The mortgage balance separately is how much is owed on that note. As you know, a note and a mortgage are two different things. The note is actually the loan that's being borrowed for the money. The mortgage is actually the pledge of collateral that is backing up that loan. So the pledge of collateral is going to be the full amount of that mortgage as originally recorded, and then the note will have a different balance as it's paid down, or sometimes it may go up if there's interest or penalties. And those two will be two separate amounts. The amount on title is normally going to stay the same. Lenders don't often update the amount on title because of a few factors. First of all, there's a cost involved. Every time you record something on title, it costs $50 or $60 to prepare that release or that adjustment. It costs another $50 or $60 to have somebody carry that down to the courthouse to record it. And there's recording fees that the county may charge of $150 or $200. So if the lender updated the title every single time there was a change in balance, it would get pretty expensive. And that could happen every day because a mortgage balance actually changes every day because interest accrues each day, and then there's a payment at the end of the month that brings it back down, and then it creeps up every day. In fact, when you do get a payoff letter, and if you are in need of an actual mortgage balance on a piece of real estate, you need to contact the lender and get either what's called a payoff letter or an estoppel letter. And you must give them an exact date you want that for. For example, if you get a payoff as of today, and then you send a check to pay off that loan and the check gets there 3 days later, the check will be short by a small amount of money because the actual mortgage balance will have gone up. So you need to give them an exact date to have that payoff amount good for in order for it to be valid. You remember that the mortgage balance can be affected by a few things. If there's taxes not paid on a property, the lender will probably pay those and add it to the mortgage balance. Sometimes there could be force-placed insurance where the property owner is not paying for insurance and the mortgage company buys insurance to protect their interest on the property and then tax it onto the mortgage amount. There could be penalties and interest if there's a foreclosure, and even legal fees. So a mortgage balance is on the note, and the mortgage amount is what's on title. They could be two different things. The title will show what the lender has last recorded. In most cases, it's going to be the original amount of that mortgage. They won't change it during the mortgage, the running of that mortgage and the payment. Sometimes they do update it maybe every year, every couple years, but it's not very common. And to get the actual mortgage amount, you have to call the lender and go through their process of authorization to get that number. If you have more questions about mortgage balances or any title information, you can reach us at our website at TitleSearch.com.